So prices might go up. In fact, we're expecting headline prices to go up soon when we get some of these base effects from last spring. What is the main thing that, whether it's the Fed or investors or anyone else thinking about this question, should be looking for to get a sense of whether inflationary pressures are something to worry about or something that's just, transitory, to use a popular term?
Thanks for having me on. So I think the key ingredient to really make inflation a persistent phenomenon and not a transitory phenomenon is wage incomes, right? That is kind of the critical thing if we're trying to distinguish between sort of one-off, whether it's commodity prices or airfares or lodging prices, all of those things. I think we can expect we're going to see some price effects as a result of reopenings, as a result of vaccinations, and that's going to be in the year-over-year reading for approximately 12 months. But when we think about how this is actually going to sustain over time, right, especially when we think about a lot of these fiscal relief packages that are meant to kind of keep people whole for the time being, whether all of those different facets are really one-off in nature. They are transitory because we're not going to just do fiscal relief packages every year. We're not going to be passing this kind of big legislation every year, at least under the current composition. And in the absence of that, the real thing to look out for is, are we going to get the kind of tight labor markets that mean that when prices go up, wages are also going up alongside them? And if that's the case, which is something you saw in the 70s, which is the kind of big sort of shadow looming in the background of all these inflation discussions, that's the time when we actually did see wages grew and prices also grew. In this circumstance, if we just see prices adjust on a one-off basis,
right.
One, I don't think the Fed should be reacting this way. And what the Fed has been indicating, it doesn't seem like they are inclined to react particularly hawkishly just because we see airfares adjust aggressively in the second half of this year.
Okay, so Skanda, interesting you make the point of airfares, because you've got a great chart in your piece that really shows how much we have yet to see the services sector explode from all the pent-up demand that is still willing to get out there. Yes, we've been spending on long-term items. We've been decorating our homes. We've been doing some building. But we haven't been able to buy our airfares. We haven't been able to go out to restaurants. But if we do start to see that, and if we do start to see perhaps even, the $15 hour minimum wage finally get passed, that's something that's being talked of. If we do start to see some of the more new fiscal approaches being passed into law and perhaps driving wages higher, could that be sustainable in some way?
I think I don't want to sound dismissive of this sort of set of scenarios. Right? They're all kind of possible in various ways, and a lot of things can intervene to change the trajectory. The notion that we could have a really strong recovery because we passed two really big fiscal packages that really bring us back to a tight labor market and maybe hopefully beyond that in terms of strong wage growth, that there are some inflationary repercussions. I wouldn't dismiss that out of hand, but I think we are a long way from that right now. It's a scenario that if we do see the kind of, if the economy is firing on all cylinders, doesn't hit any negative shocks, and we've got an infrastructure bill, a fiscal relief bill, and the vaccinations and reopenings kind of move smoothly through the second half of this year, having an economy that's running closer to the kind of pre-pandemic labor market, something hopefully better over time, can have certain impacts on inflation. I don't want to be dismissive of that, but I think that's a scenario. That's a scenario where a lot of things have to go right. And if they all go right, are we talking about wage growth and inflation down the line because of it? I think that's a more realistic story if we can get through all of those different hoops. And we do see expansive fiscal policy, a pretty accommodative Fed, especially given, like right now we are talking about really high levels of unemployment, really high levels of non-employment, and likely going to see pretty meager wage growth until that time.
So Skanda, hold that thought on the wage growth thing, because I want to get your thoughts here on how commodities tie into this. We've obviously seen an appreciation in oil prices even before the disruptions in Texas. We've seen a massive increase, of course, in industrial metals, copper, aluminum, tin, trading at record highs. With those increases that we've been seeing in those prices and the current levels of wage growth, when you add that up into whatever a calculus you use here, does that amount to sustained inflation?
I think as of now, no. I think it reminds me in some ways of when we were at the other side of the commodity super cycle back in call it 2007, 2008, right? Where you had high commodity price increases then too. And and yet we actually saw wages and employment go the other direction. So if prices just increase on their own, and we don't see sort of concurrent or future wage growth kind of match that to some degree, what we're going to see is a relative price change, right? And that relative price change is one-off in nature. It means lower real incomes for Americans, but it's not the kind of thing that monetary policy really solves. If you try to raise interest rates to try and solve that problem, you're actually probably going to make things even harder, because what you really want to see is that you get that one-off price through the system, but you really shouldn't be focusing on commodity prices, which are especially volatile.
Right.
And there's like a base effect. It's gonna show up in like PPI to some extent. Maybe it'll show up in CPI and PCE. But really, when we're talking about the longer run trajectory of the economy and the sort of stickier forces, I think the labor market's where it's at.
Skanda, real quickly, we have about 30 seconds. What if checks and fiscal stimulus just becomes a permanent part of the policy landscape? And before every election, politicians want to send out checks, and every time there's a little weakness, it's checks. And so that this is not one-off. Could we actually start to get a new trajectory towards inflation if it really looks like the way we conduct macro, I know there's a long question, changes in this country?
I think just to think a little bit more rigorously about that. If we see income replacement happen, not through your wage, but it's happening through the government, right? And so you're seeing as the incomes are shifting in terms of where you're getting them from. Then the question is, does that lead to more consumption? That's an open question, right? There's some ways people do spend more, but as they sort of get higher in terms of like their sort of bank accounts and their how much wealth they have, there's a spending pattern change. What kinds of goods do they spend on? Is it all commodities? Does it start to shift from services? Do they start to shift towards trying to save for longer term purchases and investments? That's a little more open, but I'm open to that discussion.
Right.
To the point that we actually get there, but I think it's just like we're so far away from that. I think it's just important to say right this moment is we're in a moment of an emergency, a crisis, and that's kind of what has to be addressed first. I don't think anyone's proposing UBI aside from Andrew Yang.
Okay.